Hi, I'm Anthony Manley from Global Trading Edge, and welcome to Level 2 Technical Analysis. Topic 2, Reversal Patterns. Perfect or typical price bars, bullish or bearish for that matter, are regarded as trending days. Some price bars alone show us that neither bulls nor bears have won a battle for a session. The outside day. So this here is a great pattern. When a share price movement engulfs the trading range of the previous day, it is referred to as an outside day. The outside day is not regarded as a trending day, but signifies exhaustion in price action. Its appearance on a chart can alert us to a possible change in market sentiment. You can see we've got an example here on the screen in bar chart format. You can see there that the one on the left is actually quite small, the high and the low is quite short, whereas the one on the right of that is actually quite tall. So that is said to engulf the price bar on the left, and that's what we're talking about when we mention an outside day. The inside day, on the other hand, is the opposite. So when a share price movement trades completely within the trading range of the previous day, it is referred to as an inside day. The inside day is not regarded as a trending day because it signifies the buyers and sellers have taken a breather. Its appearance on a chart can alert us to possible change in trend direction. However, you'll need further confirmation because I can tell you now that if you just see this pattern, you're definitely going to have to look at other indicators, which we're going to get to. Inside and outside days are not bullish or bearish bars. They are non-trending days and should not be regarded as entry signals. They should simply be taken note of and treated with caution, as they could indicate a possible impending change of direction. The doji. I love these. A doji occurs when the open and close price are at or near the same. This indicates indecision, as you can see by the bar that I've actually got here as an example. When found at the top or bottom of a trend, there is a very strong chance the price will reverse quite dramatically. Dojis can occur on any chart style and are regarded as one of the most revealing signals when found in a trending stock. There are three types of doji that are the most meaningful to us. The first one is a gravestone. As you can see here, so we've actually got a price bar, the high and the low. At the low, you can see it opened at the low and it closed at the low. That is what we call a gravestone. The next one is a common doji. Now, you won't see these exactly, and what I mean by exactly is they don't necessarily form a direct T. Sometimes they do, sometimes they don't. So as you can see here, it opened in the middle of that price bar and closed in the middle of that price bar, forming what looks like a cross. The dragonfly, on the other hand, it opens at the high and closes at the high, forming what is called a dragonfly. The gravestone doji. This indicates the sellers have won the battle and pushed the price down. When a gravestone is found in an uptrend, it is a very strong signal that prices could reverse and trend down. Here's an example. You can see that in this particular chart it was trending upwards. We've actually got what looks like a gravestone at the very top. It's opened near the low and it's closed at the low. There we have a good example of a gravestone, and we can see it's turned and now it's heading back down. So that's an example of trend reversal when you actually see a gravestone doji. Here it is in candlestick format. So the previous chart that you just saw, that was in bar chart format. Now with Metastock, you can just flick between these two, between a candlestick and a bar chart. And you can see there, that's exactly the same chart as what we saw on the previous page. It's just in candlestick format. So there's the gravestone. That's exactly what it looks like. The common doji. This indicates indecision. Common dojis can be found anywhere on a chart, particularly through periods of consolidation. They have the most meaning when found at the top or bottom of a trend. So as you can see, this particular common doji is found at the top. Now this is in bar chart format. And look at that. The following day we had an outside day and then all of a sudden it dropped. Here it is in candlestick formation, and as you can see, that's exactly what's been happening. Now, the dragonfly doji indicates the buyers have won the battle and pushed the price up. When a dragonfly is found in a downtrend, particularly near the bottom, it is a very strong signal that prices could reverse and trend upwards. Let's have a look. So there's an example of a dragonfly, and what happened? The stock was actually trending down, formed a dragonfly, it turned and then started heading back up again. Here it is in candlestick formation, and as you can see, strongly turned at that particular point and went back up again. These are great indicators of turning points.